JPMorgan reporting just a short time ago. I want to get straight over to Leslie Picker, who's been dicing and slicing all the different numbers. What you got for us?
Doing a lot of dicing and slicing. I think the market is too, with those shares kind of muted in the pre-market today. But a lot of interesting things to get to here. I know Becky mentioned some of Diamond's comments last hour. He really goes into the state of the consumer. U.S. consumers and businesses generally remain healthy, he says, although consumers are spending down that excess cash buffer. However, persistently tight labor markets, as well as extremely high government debt levels with the largest peacetime fiscal deficits ever, are increasing risks that inflation remains elevated. He also goes on to comment about the war in Ukraine. He said that was compounded by last week's attacks on Israel may have far-reaching impacts on energy and food markets, global trade, and geopolitical relationships. Jamie Dimon says this may be the most dangerous time the world has seen in decades. Nonetheless, overall, it was a very decent quarter for the firm. They showed average loans were up 17%. Average deposits were down 4% firm-wide. We'll get into that a little bit more when I tell you about what happened in their consumer and community banking division. But net income up 35%, and excluding that First Republic acquisition, it would still be up 24%. Net interest income, which is the metric that people follow to kind of get a sense of how profitable the business of loan making is, that was at $22.9 billion, up 30% or up 21% excluding First Republic. So a huge tailwind from rising interest rates. Provision for credit losses was $1.4 billion. That reflects net charge-offs of $1.5 billion. Net reserve release, actually, there was a net reserve release of $113 million. Now, some of these metrics partially very, very small offset by an impairment of an equity investment in their payments division. But going into that consumer and community banking, net income there up 36%. Bank and wealth management driven by higher net interest income, reflecting higher deposit margins. That's in part because the larger banks haven't been needing to pay out too high of rates to their deposit holders to make loans. So those margins have been able to be pretty steady, but that's partially offset by lower balances as their customers look to kind of generate higher yield in cash that can generate more income for them. In the investment banking division, revenue overall down 6%, driven by lower advisory fees, but that was largely offset by higher debt underwriting fees. Markets was a little mixed here. Equities revenue was down 10%, but overall it was slightly higher in the fixed income, just up about 1% for that group within markets, guys.
Okay. Leslie Picker, we appreciate it. We were just looking through some of these. I thought that some of the stuff that he said just about the country was fascinating, in addition to what he was saying, frankly, about JPM. He basically goes into a whole sort of, I don't think I don't know how anxious you think he is, but between Ukraine and talking about, where we are in terms of peacetime fiscal deficits, and that's some pretty heavy stuff.
It is, and ultimately he kind of pins it back to what that means for interest rates, right. Whether inflation is going to be something that is persistent and strong, and whether interest rates have to go much higher. But obviously he's concerned about what he sees around the globe.
He's always been more, though, ambitious, let's just say, about discussing some of those anxieties than I think most of the other bank CEOs.
Oh, yeah. He's never one to hide his thoughts on any of these issues, and I think he takes the leadership role seriously. Right. That as a leader in corporate America, it's his job to speak out on these issues. It's something he's done as long as we've known him.